About a year ago, we were getting so frustrated it felt like every other call we were getting was from property developers looking for more private investors.
We know a lot of wealthy people and we work in finance, so we thought, how can we use our network to help property developers raise more money?
We can borrow money from banks and lending companies, but when you're working with individual investors, well, that's a whole other set of rules and regulations to abide by.
So we did some research, and when I say we dug for answers, we dug deep, and what we found will likely shock you.
This has taken us years to research and gather the relevant information. We called the FCA directly,
Searched online,
had numerous meetings and conversations with our industry peers.
we even looked in books, and yes, the findings are grey.
We found there is no dedicated chapter from the FCA called Raising Private Investor Finance.
The thing is, everyone or anyone can be an investor, also known as a retail investor. We can be investors, you can be an investor, your Aunt Sally, Bob down the road. It's your money, you should be able to do what you want with it.
We often hear people say, there are investors everywhere, but are they the right ones? And are you illegally allowed to take their money?
The problem is, everyday people are losing thousands of pounds giving their money to people or companies that they shouldn't be, and in some cases losing their entire life savings.
It looks like this all started years ago, back in 2014 with the collapse of London Capital and Finance, also known as LCF.
A scandal, as it's reported, with over 11,000 people losing around £237 million.
LCF were an authorised firm, but they were involved in both regulated and non-regulated activities.
At the time, they were issuing mini bonds, which was not a regulated activity, so the compensation scheme wasn't available to investors if anything went wrong.
Well, it did in 2019 when the company went into administration.
People bought these bonds in exchange for a fixed rate of interest over a set period of time, like a loan, or how we like to call them, IOUs.
You may have seen numerous reports in recent years around Blackmore Bond PLC, who raised money issuing mini bonds as well. You had Bassett and Gold, B&G Finance, the Wellesley Group, JVIP, and Grand Design's Kevin McLeod. Even footballers are getting caught in the act. Oh, no, that kind of act.
I went a little deeper and found that at least 25 mini bond issuers collapsed since 2018, and investors in this industry lost around 1 billion that year alone.
You may be thinking, nah, this isn't for me. I don't need to know about the FCA rules. They're for large regulated firms.
The responsibility and laws are with the person raising the money, so it is their duty to check the investor is right.
So how do you know the investor is right if everyone can be an investor? Whose money are you allowed to use? Noting the popular phrase, using other people's money. What people?
You are able to use exempt investors, such as, or also known as, high net worth individual or a sophisticated investor.
But in our opinion, these are few and far between.
And potentially getting smaller, with more changes likely to come around thresholds.
To explain why high net worth individuals and sophisticated investors are exempt, imagine a school with 1,000 pupils. The headmaster is responsible and in charge of these pupils.
Their primary goal is to ensure the pupils do well and pass their exams. But does the headmaster really need to worry and pay attention to all of them?
No, well, not in the same way. You always get a small percentage of pupils, like Sarah here, who just know what they're doing.
These pupils don't need the same level of help as, say, Ben here, who hasn't really got a clue what's going on. This is a similar setup to raising private finance from individuals.
The pupils represent everyone, like Ben, the retail investors.
The headmaster represents the FCA, whose primary goal is to protect people.
The small number of people like Sarah who don't need to be protected by the FCA are exempt investors, as they are expected to understand the financial risks involved.
The majority of people do need protection.
And there will be a financial regulator for their own country, such as US Securities and Exchange Commission, which is SEC in America.
You don't need to be a money expert to know that your money is or has less power at the moment, meaning everything costs more.
Inflation has drastically increased, which has led to many mainstream investments having negative or low returns. So people are searching for alternative places to put their money for higher returns.
Everyone is overwhelmed by choice these days.
And it doesn't help that they all hang out on social media. Social media has become like the new online pub where it is rife with illegal posts.
So no wonder people are being led into high-risk investments as they search for higher returns on their money.
What is a high-risk investment?
When you think about property, you may think, safe as houses, but this isn't entirely true for property development, as property development is classed as high risk.
It is speculative. There is a high chance of you losing your money completely. Whether you're refurbishing a house or building new homes, value is being added, but there is a contingency built in for a reason. Show me a developer that hasn't used some or all of their contingency on a project before.
And it's illiquid, therefore your money is tied up in the land or property, so you can't easily get it back in 24 hours.
If you're thinking, well, that's rude, the FCA shouldn't be able to tell me what to do with my money, they're not. They are just making you aware that you may lose your money and there is no compensation scheme available, so they are unable to protect you.
Which is why it's important to understand the risks involved. And here are 3 key updates you need to be aware of.
Financial promotions. This is all around how you attract potential investors. So put your investor pack aside because this starts way before that.
There has been a permanent ban on the mass marketing of speculative and liquid securities, including mini bonds, to retail investors.
Basically, you're not allowed to financially promote to anyone anymore unless you can prove that they are an exempt investor. So your social media posts, which can be seen by anyone, would now be illegal if you were asking for money for your property development projects.
And that's not just restricted to just posts quoting figures. There has been talk that it can also be posts enticing people to contact you, as it comes down to your intention.
Loan or investment. To briefly summarise the difference between a loan and an investment.
A loan, also known as debt, is often structured as a fixed amount over a fixed period of time for an agreed fixed interest rate.
An investment, also known as equity, is kind of the opposite. There is no fixed time period. It's very much about estimates and expectations. For example, the project is estimated to complete in 12 months, but it may take 13 months, so your money is going to be tied up until then. Or you're expected to receive 10% of the profits, which are expected to be, say, 100,000, but the final profit may be higher or lower than the 100,000 estimate. So it just feels much more riskier, right?
And you may be thinking, hang on a minute, what happened to those mini bonds that were noted earlier? Like, where do they come into the equation? Well, this is directly from the FCA.
A mini bond is a type of investment that typically offers high returns.
This reflects the much higher risk involved in the investment.
While there is no legal definition of a mini bond, it's essentially an IOU issued by a company or issuer to an investor in exchange for a fixed rate of interest over a set period.
The return on investors' money depends on the success and proper running of the issuer's business. So if the business fails, investors may get nothing back.
So are we now saying that the FCA is treating loans and equity investments in the same way if the new rules ban the promotion of mini bonds?
We still have people say to us, oh, don't worry, it's a loan, it's not an investment, it's a fixed rate, fixed term. type structure, that's great. That's a beautiful story. But how are you guaranteeing that I will get my money back? And often they can't. The rules around the equity side have been in place for many years, but these new rules now supersede the old rules.
Structure. If the FCA are allegedly treating mini bonds or loans in the same way as investments, there is now the added worry that developers may potentially be in breach of setting up a collective investment scheme or an unregulated collective investment scheme.
Basically, if you're using more than one private investor, you may be seen to be pooling money.
Everyone's situation is slightly different, so if you are unsure, please play it safe and ask someone who can provide you with some legal advice. We're just here to raise some awareness of the situation.
What we can say is that the FCA don't change their rules often, so when they do, they generally are here to stay, which is why it's always best to get your ducks in a row, especially if you're taking on multiple projects or intending to use multiple investors.
Oh, and watch out for the people out there that give you their story on how they got to where they are. They most probably did via the old rules, which were a lot easier and now a dead end.
The good news is there appears to be at least one clear route that developers can take. Firstly, pre-qualify the person, i.e. make sure they are a high net worth individual or sophisticated investor before discussing the new project details with them.
And secondly, only use one investor, so to not breach the potential pooling implications.
Now, we have 1,000,001 questions on this subject, and this is purely a summary of the current situation to raise awareness.
We know it feels like another roadblock, especially with the new changes, and we are working on more videos where we'll be sharing with you our findings on how you can work with private investors legally.
Anyway, if you're still watching this video, well done and thank you. We nearly didn't make it ourselves.
If you did find it useful and you do want more information on the topic of private investors, we'd really appreciate if you could click the thumbs up button and subscribe to our channel so that you can stay up to date on our latest videos.
And if there's something specific you want to know or have a question, then please leave us a comment or email us and we will try our best to help you where we can.